Hello everyone, welcome to the another class of management accounting, and I hope you have started solving the problem. And yes, I want to mention here something like as we have got the information that this time we'll have the MCQs, so definitely once I'm going to complete all the units in detail, then I'm going to post a PDF of MCQs also in a group. But till that time, it's always better to learn the topics and details. Okay, so today also we'll try to solve one more problem related to the preparation of cash flow statement. Okay, indirect method. So let's check out the question of the day. So this is the question where we have information about the equity and liabilities and assets and some additional informations, and on the basis of these information we need to prepare the cash flow statement. So as always, okay, the way we used to solve, we'll first discuss the question, each and every item given in the question, and then we'll try to solve it. Okay, so very first item is given here, share capital. So if you will check the amount in 2014, the share capital amount is given 8 lakh, and in 2015 it is showing 10 lakh. That means the 2 lakh share value, or like the share capital got increased. Okay, but if you are going to check the second additional information, then you will have a reason behind this. Like, it's not like normal every time we used to have this type of increase and no additional information related to that, so we used to assume that okay, it is like issue of shares and we received the cash or fund, so it will be our source. Okay, and it is going to be source under the cash flow from financing activity. But in this question it's not the same case. If you check the second additional information, we have the information very clearly given, what that assets of another company were purchased for a consideration of rupees 2 lakh payable in shares. So that means this 2 lakh, whatever, you are able to see the difference in the share capital, not because of the normal issue, okay, of the shares. It is, we have issued the shares to do the payment. Okay, so it's not going to affect our cash balance, so we are not going to make the entry of this anywhere. Okay, then next we have a general reserve, and if we are able to see again here, general reserve 2014 it's 2 lakh, and in 2015, I'm sorry for this interruption, and in 2015 it is 2 lakh 40,000. Okay, but again if we are going to check the your sixth number additional information, that is loss on sale of machinery rupees 800 was where of general reserve. Okay, written off from the general reserve. So we will check out, okay, to find out actually how much we have transferred towards the general reserve, okay, during the year, and working note. Then next we have a profit and loss, which we always use to calculate cash from operating activities. Then we have a bank loan. So if bank loan also we are able to see, okay, in the 2014 value is 2 lakh 80,000, but in 2015 there is no value at all. So we have to, like, simple assumption is what? Assumption is that bank loan we have repaid. Okay, we have repaid the bank loan. So if I'm going to repay, that means it will be an application of cash, and this bank loan part of debt, so it will be under the heading of cash flow from financing activities. Okay, then we have a creditor, that is your current liability, so increase or decrease we will check and work out under the cash from operating activities. And then we have the next item is provision for tax, and related to the provision for tax also we have the additional information under the fifth point, income tax provision during the year rupees 1,32,000. so we'll again try to solve, okay, under our working notes to find out how much actually tax paid and how much actually the provision for tax made during the year. Clear? Then now coming to your asset side, machinery 6 lakh and 6 lakh 76,000. But again, if we are going for the your this additional informations. Then again this will be, we have like where second additional information continuing with that only. The following assets were purchased: stock, machinery worth rupees 1 lakh, machinery, okay, purchased, and for that payment have gone in the payment we have did in terms of shares, okay. And then we have the depreciation, okay, on machinery. So lots of things are happening with the machinery, so again better to understand under the working notes. Now coming next to your land and building. So in 2014 land and building value is 8 lakh, and in 2015 land and building value is 7 lakh 60,000. So very simple assumption we are going to take. We'll assume that we have sold the land and building of worth rupees 40,000. So sale of land and building is your fixed asset, so definitely sale of fixed asset, it is a source of cash, but it will come under the heading of what? Cash flow from investing activities, okay. Then next we have a goodwill. So goodwill, how we got the goodwill worth rupees 20,000 in 2015? The answer is hidden under the additional information number 2. If again we will read, okay, assets of another company were purchased for a consideration of rupees 2 lakh payable in shares. The following assets were purchased, okay, the following assets were purchased: stock 80,000, machinery 1 lakh, fine. And after that we don't have information. So what we are seeing here, company is paying the consideration of 2 lakh, okay, and we have the detail of stock 80,000 plus machinery 1 lakh, that is total 1 lakh 80,000. So where is the 20,000 gone? So nowhere gone, okay. We have to relate here that worth rupees 20,000 goodwill also we have purchased from the another company. So and then and it's very clear that we have paid in terms of shares, so I'm not going to enter anywhere in your cash flow statement, clear. Next we have a stock. So related to stock, as we had the information that we have purchased the stock of another company also. So again in a working note we will check out whether stock value is increasing or decreasing compared to the previous year. Again according to that we will use in calculation of cash from operating activities. Next we have a data, so increase or decrease we will check, and again we are going to use it under the heading of cash flow from operating activities. Now we have a bank and cash, both is your cash and cash equivalent, and as we know very well that cash and cash equivalent opening and closing balance we use while at like final adjustment as a final rechecking, okay, while preparing the cash flow statement. So your balance sheet is empty now. Now coming to the additional information, very first additional information is given: dividend of rupees 92,000 is paid. So 92,000 dividend we are paying, dividend payment, okay. Dividend payment is your non-fund or non-operating expense, so we have to use it while calculating the cash flow from operating activities also. And now dividend we are used to pay on the shares, so we have to show it under the your cash flow from financing activities also as the application, okay. So twice it will appear. Then second point we have already discussed too much. Now coming to your third point, machinery was further purchased 32,000. So you are now purchasing the machinery for cash, okay. See, in a second point you had the information that you purchased the machinery worth rupees 1 lakh and did the payment in terms of shares. So I told it's not going to affect your cash balance, so we are not going to enter it, okay. Nowhere we are going to mention in the cash flow statement. But now information is what? Machinery was further purchased for rupees 32,000, okay. So that means no other information, nothing else, that how we are doing the payment. So simple assumption, we have did the payment in terms of cash, so now we have to take it as the what? As the application of cash, and it will come under which heading? The fixed assets and all under the heading cash flow from investing activities, clear. Next we have depreciation written off on machinery, so depreciation non-cash expense, okay. And then we have an income tax provision during the year. So how much provision you are going to make during the year, that we used to treat it as a non-cash expense, okay. How much provision we used to make, that we used to treat it as a non-cash expense. And then in working note we'll try to find out how much tax we have paid, and whatever we are going to get, that we will deduct, okay, at the end for while calculating the cash flow from operating activities. Clear? Next, we have a loss on sale of machinery, rupees 800, which was written off from the general reserve. So that we will adjust with the general reserve account, and then we need to prepare the cash flow statement. So let us check out the solution. First, we have machinery account I have taken here. So opening balance was 6 lakh and closing balance was 6 lakh 76,000. Okay, and then we had the information that machinery worth rupees 1 lakh we have purchased, and we did the payment in terms of share capital. So entry for that also to share capital purchase, that is 1 lakh. Then we had the information in additional information only that we have further purchased the machinery worth rupees 32,000. So that is your cash. So to cash 32,000. Then we had the information that depreciation were written off on the machinery rupees 48,000. So by depreciation your 48,000. And then we had the information again, loss on sale of machinery, which we have written off from the general reserve, but it is a loss on sale. So again the making the entry here also 800. And then we had the the closing one. So these are your opening balance, 1 lakh rupees machinery you purchase, and payment in a share capital 32,000 machinery you purchase, 32,000 worth 32,000 rupees machinery purchased in terms of cash, depreciation how much charged, loss on sale how much, and closing balance. These all we had the information, so we are going to enter it on a proper place, and then we need to just find out the balancing figure. And this time we are getting the balancing figure on credit side, so we are going to assume it as a sale. Okay, so this sale again, what is happening? Sale of machinery. So if I'm selling my fixed asset, that is going to give me the cash, source of cash, and fixed asset, so it will be the under the heading of cash flow from investing activity. So I hope now it is clear. Now coming to provision for tax account. So we had the opening balance and closing balance, so make it entry provision for tax liability. So starting from the credit side, balance BD your 1,20,000 and balance CD your 1,40,000. And then we had in the additional information that provision made during the year. Definitely we have to simple assumption that provision we used to make from the profit and loss account of the year. So by profit and loss account 1,32,000, close the account, you will get the balancing figure, and we are going to get the balancing figure debit side, so we have to assume it as that tax paid. So what we are going to do, the provision made during the year 1,32,000 non-cash expense, and the tax paid 1,12,000 will use as a last deduction item while calculating the cash from operating activities. Now moving to the next, as we had the information that stock we have purchased from the another company also. So opening stock we had, if from balance sheet I am taking, opening stock we had 4 lakh, and then we are saying that we have purchased also worth worth 80,000. Okay, rupees only, worth rupees 80,000, but did the payment in terms of shares. So totally we should have the stock, okay, value 4,80,000, but the closing stock is showing 2,96,000. that means whatever is the difference, that is decrease in stock. And decrease in stock again we are going to use where? We are going to use it while calculating cash flow from operating activities. Decrease in current asset, add it. Okay, then we have the next calculation of transfer of to general reserve. So opening balance of general reserve was 2 lakh. Okay, out of that 2,08,000 we have used, okay, against loss on sale of machinery. So new balance how much? 1,99,200. but we are having in the balance sheet closing balance as 2,40,000. So difference of these two will tell you how much actually we have transferred towards the general reserve. So we have transferred 40,800 towards the general reserve, okay, which is your non-cash expense. So now finally we'll prepare cash flow statement, where very first we need to calculate cash flow from operating activities, and we start from the net profit and loss. Closing minus opening, profit and loss 1,22,400 minus 1,22,000. It will give us the net profit and loss, that is 400. And then in this we need to add back all our non-cash and non-fund or non-operating expenses or losses. We have already checked. Depreciation on machinery, non-cash expense. Dividend paid, non-operating expense. Provision for tax, non-cash expense. And transfer to general reserve, non-cash expense. So these all adding these all and going to your outer column of amount, and it is 3,12,800. Okay, and 400 we had the net profit and loss. So we are going to get 3,13,200 as our operating profit before working capital change. Before working capital change. Okay, so I hope you're getting it. Now the next is what we have to do. We have to add in this what your decrease in current assets and increase in current liabilities. Okay, decrease in current assets and increase in current liabilities. So we have already checked in working notes. Stock is decreasing for how much? It's for 1,84,000. And from the balance sheet we can make out that debtors are also decreasing in 2015 compared to 2014. Okay, and that difference is 63,200. Okay, and no other current liabilities increasing. So just making the total of these two and writing in outer column 2,47,200. And then we need to deduct increase in current asset and decrease in current liability. So no other current assets are there. Okay, only we have the one current liability which is decreasing, that is creditors. So creditors, again from the balance sheet, if we'll check in 2015 compared to 14, there is a decrease of rupees 59,200. Okay, so now making the all plus minus, that is operating profit before working capital changes plus decrease in current asset and increase in current liability minus increase in current asset and decrease in current liability. We are going to get the amount 5,01,200, that we are going to tell indicate it as a cash generated from operations before tax. So we need to deduct in this income tax paid. How much we have paid the tax? Working notes you can refer back. Okay, we have paid the tax 1,12,000. So finally we are going to get the cash flow from operating activity 3,89,200. Okay, now moving to the next. Okay, continuation. Cash flow from investing activities. Okay, investing activities which is going to cover okay transactions related to your fixed assets and long-term investments. Okay, and those things where the transactions are going to affect your cash balance. Fine. So we have checked in your working notes that we have sold the machinery worth rupees 7,200. Balancing figure we have got. Okay, and as selling, so that means I am going to receive the cash. Fine. So if I am receiving the cash, it will be a source. But only thing you have to always keep remember, okay, the fund flow was easy. In fund flow we just needed to like find out whether it is a source or application. But in cash flow we need to find out okay like whether it is a source or whether it is application, and same time you have to find out that under which heading it will come, under which activity it will come. So this is your sale of machinery. So under investing activity 7,200. Similar way, I'm really sorry for this disturbance. Okay, and similar way we have sale of just give me 2 minutes, it's always better to avoid it. So this is airplane mode. Yes, now I can continue nicely. And then we had a sale of land and building. From balance sheet we have make it out. Land and building, if you remember, the 2014 value was somewhere I think 8 lakh something like that was there, or it was something else because I can't go back. Okay, the value of land and building was, yes, in 2014 it was 8 lakh and in 2015 it is 7,60,000. that means 40,000. Okay, assumption it is worth rupees 40,000 land and building we have sold. And yes, in some books you can find that where they used to assume it as a depreciation, but what I used to do, I used to generally take it as a sale or purchase, and for depreciation I go for the additional information. If in case the information of depreciation is given in additional information, and after that also if I am going to get, so definitely for that we will prepare the ledger account, and balancing figure will tell me that whether it is a sale or purchase. Okay, so sale again, so again it is going to be the source. And same from the additional information, we had the information what, that we have purchased the machinery further worth rupees 32,000. So it is application, that's why it's a negative, because cash is going out from my pocket, so I have kept it in a bracket. So finally 40,000 plus 7,200 and minus 32,000, we are going to get 15,200. See, with the star mark I have indicated. Okay, like how much you have the, see, you can check here how much we have the cash flow from operating activities and how much we have a cash flow from investing activities. Okay, so now the third activity we need to calculate. Third activity is your cash flow from financing activities. So financing activities we have checked very well. From the balance sheet we had only one, that is repayment of bank loan. Bank loan was 2,80,000, and repayment, that is application, that means cash is going out, so it's a negative balance, so I have kept it in a bracket. And then from your additional information we had the information that we have paid the dividend worth rupees 92,000. So this is again a payment, again application, again the negative value. So 2,80,000 minus plus. Okay, 2,80,000 plus 92,000, we are going to get total 3,72,000. So it is not going to be a cash flow, it is going to be a cash outflow. Okay, because the negative one, we are not getting inside too much, we have paid, actually we have got nothing. Okay, we have not got nothing, no inflow of cash from the financing activities. Okay, with respect to financing activities, only the outflow of cash has taken place, so it will be your cash outflow from financing activities, that is 3,72,000. So now finally we need to add all the three main activities amount, that is 3,89,200 plus 15,200, and as the cash outflow, so minus 3,72,000, and then we are going to get the value 32,400. And if we are going to get the positive amount, then we used to indicate it as a net increase in cash. Okay, so net increase in cash is your 32,400, and then in this we need to add back the opening balance of cash. So opening balance of cash we had 2,000 only, so adding 2,000 here, and then we are going to get the closing balance of cash 34,400. because if you remember, the in your 2015 we had the bank value 32,000 and cash value 2,400, which I told you both is your cash or cash equivalent. So 32,000 plus 2,400, total closing balance of cash is going to be 34,400, which we are getting here. That means solution is clear. So just try to solve it, and if any doubts related to the subject, you can definitely ask me. Till then, thank you. Have a nice day.